and welcome to the webinar on de-risking digital assets. We're going to focus on banks and custodians here. If you have any questions, please just drop them in the chat here. We'll look to answer those at the very end, where we'll have a 10-15-minute Q&A. So overall, digital asset market, it's experienced explosive growth. I mean, take a look at the price of Bitcoin, all the other crypto assets that we're following, hitting all-time highs. We see more mainstream corporate adoption with the ETF business, and this just brings overall excitement, in my opinion, to the space. The contagion spreads, we see real investment, real adoption. But this adoption and this rapid growth comes with real risks that all custodians and banks must mitigate. Next slide, please. So we have a number of companies here collaborating with us. And in the interest of time, I will introduce everyone and their companies quickly, but you're going to be hearing more about them coming up very soon. So we have Alex from Fireblocks, Ali from Coincover, Lana from Notabene, Tristan from AlphaPoint, and myself from Cryptio. Next slide, please. And overall, high-level summary, we're going to be talking about custody risk, disaster recovery, transaction monitoring, compliance obligations such as the travel rule, order management and exchange deployment, audit risk, and really just showing why it's necessary to have an integrated tech stack solution. So it's no secret, we're all in the crypto business. There's been a lot in the news for banks, custodians. There's been a lot of new regulations such as MiCA and the travel rule. Some exchanges have gone under, and a lot of it has been because they've failed to mitigate a lot of the risks that we're going to identify today. We've seen an explosion of stablecoin adoptions, but also the stringent requirements upon those companies. And these are all the efforts globally going in, trying to make sure that our industry, which is new, grows responsibly. Next slide, please. So we're talking about all these different companies mentioned earlier. I'll go into high-level summary. You're going to be hearing a lot more from each company in more detail. But we have Fireblocks talking about security risk, operational risk. Coincover talking about disaster recovery, loss of access, theft prevention and cure. AlphaPoint talking about trade reporting, order management risk, exchange deployment risk. Notabene talking about travel rule compliance and counterparty risk. And Cryptio talking about reconciliation risk with an Omnibus structure, including audit risk from a GAAP and IFRS perspective. So we have very unique companies here. They're all different type of companies that are laser focused on specific risks. But there's a need for every one of these companies. As soon as you try to do too many things, you don't do those things very well. So we're laser focused on very specific things within our industry and trying to mitigate risks. We all fit together in some form. We all commonly share, each one of these companies, multiple clients across our industry where they're using every one of our products to help mitigate the risks that they face. So now we'll get into more details, starting with Fireblocks, sharing more of what we're doing.
Thank you, Jeff. So yeah, I'll talk very briefly about Fireblocks. I've only got 3 slides here, but essentially we are a global company of 600 employees with roots in cybersecurity. And our mission statement is to enable every business to easily and securely support digital assets and cryptocurrencies. So if we move on to the next slide, what I would say is that from my perspective, everything that is blockchain-based starts with a wallet. Any operation requires a wallet. And so we've basically built an MPC stack that essentially offers 2 options here. One is self-custodial wallets, where institutions can create wallets for themselves, and they can run the wallets with their keys and their coins in a secure manner. And the second option is non-custodial wallets, where the end customer can essentially hold the keys themselves, and this is provided by the intermediary. So with this in mind, essentially we can cover 4 different use cases. One is obviously custody, self-custody for institutions or wallet as a service for the end users. The second use case is around tokenization, where our customers can either import their own smart contracts and then run the governance and the operations associated with those smart contracts, or leverage the libraries of smart contracts which are audited and available within the Fireblocks platform. And again, here the idea is to provide end-to-end security around the lifecycle management of the smart contracts and the associated tokens. The third use case is around cryptocurrency trading and treasury management, where OTC desk, market makers, crypto exchanges will essentially leverage what we call the Fireblocks network, which is a way to securely transact between counterparties without the need to copy, paste, and whitelist addresses. That basically removes an operational risk. And last but not least, you've got stablecoins and digital asset payments, where fintechs or PSPs will secure the orchestration of their payment workflows. Think about pay-ins, payouts, and cross-border payments, leveraging crypto rails as opposed to banking rails with obvious time and cost-saving efficiencies. Now, how we mitigate risk is essentially with a security-first approach, coming with a very simple assumption that no security is unbreakable. So we've built our tech with multiple layers of security to meet the most stringent requirements. If we move on to the next slide, we wonder basically about the key risks when running a blockchain-based application. And I think the first thing to mention here is that the surface attack is wider because of the decentralized nature of digital asset infrastructures. And we can think of plenty of different types of risks, phishing attacks, smart contract vulnerabilities, rogue employees. But essentially, it comes down to 2 main risks, operational risk and regulatory risk. So with regards to operations, securing the keys is ultimately the biggest challenge because on-chain transactions are irreversible. So here the solution is to combine multiple security layers from the cryptographic algorithm itself, MPC, which is what we're using, to hardware encryption or role-based access controls and governance down to a very granular level. But also running operations at scale requires a highly resilient infrastructure with 24/7 support and the right secured connectivities. So essentially an infrastructure that doesn't stop. And then from a regulatory standpoint, again, there are plenty of risks, but also plenty of tools that are available to meet regulatory requirements. Think about the travel rule for the screening of counterparties, the creation and management of an order book, reconciliation between Omnibus account, internal ledger, and of course the internal ledger, the recovery kit that Coincover is able to deliver. So what our customers will do here is connect those different building blocks to their platform in order to meet both their operational and regulatory requirements. Now, if we move on to the last slide, just to wrap up, I've put together some of the companies that use our services. And what you can see is that they operate in different industries and they offer different type of services. So they're facing different type of risks and therefore they use different building blocks. So what I would say is that we're nowadays in an ecosystem that is sufficiently mature to offer the right tools for enterprise to pick and choose the relevant building blocks in order to de-risk their digital asset businesses. And on that note, I will pass it on to Oliver to talk about Coincover, which is one of our partners for the disaster recovery kits.
Cool. Thank you very much, Alex. Yeah, we've always worked in great partnership with Fireblocks and we're big fans. So at Coincover, we are the blockchain protection company, and our mission is to create a secure environment for users of crypto and blockchain, allowing them to thrive and live safely in the Web3 world. We provide the best defense in blockchain, setting the standard for safety, integration, and protection. Thank you. So Coincover is a comprehensive suite of risk mitigation product technologies which are designed to protect our customers at all times. Our technologies have been developed over 10 years and used by 350 clients, which include banks, asset managers, governments, exchange, and even wallet providers. So our technology protects you by providing an automated secure backup, which is stored within physical vaults within multiple layers of protection. We create a unique biometric security protocol with you to ensure that only you and those approved by you will be able to access your secure backup, as mentioned by Alex. Working seamlessly, silently, and in real time, we protect your account on each and every transaction that takes place. We alert you when we spot something suspicious or unusual, and we flag you when you can double check everything is okay. That ensures that you remain in complete control of your assets at all time. And through our partners, we have protected 5 million users every day and tens of billions of dollars in assets. Yes, please. Excellent. And alongside that, we're also working on the cure. Coincover protection is a unique combination of risk prevention and mitigation solutions coupled with our insurance-backed warranty against failure, which is underwritten by the insurers at Lloyd's of London and reinsured by Munich Re. Our protection can be described as prevention, which is our product, and cure, which is our insurance-backed warranty. And so the Coincover takes away the hassle that comes from insurance brokers, management, and claims, whilst providing our customers with protection against significant risks in the blockchain. Protection is available globally and is not constrained by the typical geographical borders of insurance. Coincover proactively identifies and stays ahead of the latest and most significant risks faced by the blockchain businesses and consumers with technology solutions that are built to mitigate those risks. Risk levels and policies are continually reviewed to ensure the appropriate level of cover is in place. This includes a set of risks defined and supported claims, chains and tokens. And so, thank you. Just to go in a little bit of detail around this, most of you will know us from our lost access or disaster recovery. And this is a really, really big one that we've really built our company on, because 20% of all Bitcoin is locked away and inaccessible from poor use, incorrect backup of keys, and really kind of human error. And this is not something any of the platforms or wallets could really deal with. This is the human error piece. And so we protect against the most fundamental risk, your access, by eliminating single points of failure and benefit from the secure non-custodial recovery solution. But we don't actually stop there. We also look at cyber threats, because as you know, many billions have been siphoned off by cybercrime. And we fortify defenses against malicious attacks such as account takeovers, ransomware, and social engineering. And then with operational failure, we guard against operational business risks and boost credibility and adoption. And then, as always, you can have the most secure platform there possibly is, but sometimes human error just gets in the way. Fat fingers, mistyping complex public keys. So we safeguard against the sending of funds to the wrong account and corrupt and deleted access material and common mistakes. And again, we also look at technological failure. So what's really important there is we try to prevent all these things happening for you. And then if they don't happen, we can work on our insurance-backed warranty to try and return those funds for you if they're lost. So thank you very much.
Hello, great to be here. Thank you again for joining. I'm actually very excited to speak a little bit about AlphaPoint, and in particular, some of the ways that we help to de-risk digital assets and the use of it. Most people's interaction with digital assets on the retail side is, through exchanges, customer-facing exchanges, and that's ultimately what AlphaPoint does. Since 2013, actually, it's been 10 years, over 10 years now, AlphaPoint has been providing white label infrastructure for crypto exchanges. And we integrate with a lot of all of the partners and companies on this panel are integrators or partners of ours and friends in the industry that we help to facilitate kind of the user experience in access to cryptocurrency, digital currency more broadly. AlphaPoint in particular, if you want to go to the next slide, some of the core services that AlphaPoint focuses on, right? Of course, with the exchange, I'll go into that in a little bit more detail in the further slide of de-risking the exchange. That is ultimately one of the very sensitive points that cryptocurrency has, or digital assets has, in relation to fiat currency, different types of tokens. When we think about de-risking, a lot of the risk is of course, in transactions and custody, but it's also in the exchange and reporting and compliance of those transactions, which I'll get into in a second. The ability to manage what those trades look like as an institution, the ability to have different types of users, do different types of exchanges, have fee structures, etc., and of course the appropriate reporting for those activities, just like any financial institution, right? If our goal, which our goal is, right, to integrate digital currency, cryptocurrency into day-to-day life, we know and understand that legacy financial institutions have very strict compliance and reporting, in particular for exchange settlement. So that is a lot of the core value that AlphaPoint provides, is in a similar way to, let's say as an example, DTCC processes exchange and trades on security, and they have partners that do that and assets that trade and exchange on their platform. AlphaPoint facilitates trade and exchange of cryptocurrency digital assets on its platform, and does so in a way that enables the institutions to remain compliant. So exchange really is one of the core values. In addition, access to liquidity allows that. What AlphaPoint has done in particular is actually created a framework so that in order to have secure and reliable access to a book, very frankly, of cryptocurrency, right, liquidity is a combination of local books and international books with other exchanges, other market makers, other liquidity sources, and making those all seamlessly accessible for the user experience, and even for the institutional management of the liquidity risk on any particular asset, is extremely important and something that's been honed in and optimized over the past 10 years. It's something to keep in, that every institution needs to keep in mind when they're dealing in particular with volatile assets like most cryptocurrencies. Payment solutions are a newer and more focused opportunity that really digital currency, cryptocurrency has in the industry. AlphaPoint is the outspoken technology core for example, the national wallet for El Salvador, which is premised both on exchange and payments. This is a newer focus and really is making real use of digital currency, thereby actually de-risking our investments in them. Wallet solutions are integrating with a lot of the partners we see here, right? Providing that seamless user experience, both for wallet custody with Fireblocks, for example, as well as disaster recovery with Coincover, and reporting with Cryptio. The integration for payments is correlated very closely with Notabene on travel rule compliance, as we integrate with financial institutions, for example, bank on and off ramps. The Yield platform, I think, is quite clear, and everybody loves making money on their money. So Yield is also something that we offer. In the next slide is a bit of a different way to view the ecosystem. We provide often the core sub-ledger for your users, right? Somebody wants to open an exchange. If I wanted to open Tristan Exchange tomorrow, I would come to AlphaPoint, and AlphaPoint would offer those users and accounts the ability to have multi-currency accounting, integrate with all the partners necessary. As you can see here with banks, we use Notabene for travel rule compliance, wallets and Coincover, things like that. But there also needs to come the user interface, right? The mobile web, the point of sale, the ATM. Sometimes that uses exchange, sometimes that uses the other mobile wallet solutions. And on the last slide, we can go into some of the details of regulatory and operational considerations for how we want to de-risk digital assets. And in particular, the experience over the past 10 years, along with working with other industry experts, such as the companies from the other panelists here, is we get to see the complexity and, more importantly, the successful compliance with different regulatory regimes around the world. A big one is SOC certification, reporting and compliance on your transactions, both traded and payments, inter-user and inter-institution. This is a critical part of de-risking. I don't want to go too much over my time. I know that that we're waiting on other panelists here, but another way, just the last one that is critical to understand in de-risking is understanding the liquidity and trade management that AlphaPoint does, in particular as it relates to multiple currencies, and being able to report on that, the user and administrative compliances that are provided from the system is really enables people to move forward with confidence.
All right, thank you, Tristan. Sorry, I hear a little bit of an echo. Yeah, thank you so much, Tristan. All right, guys. Hi, I'm Lana. As mentioned before, so Notabene is the leading crypto pre-transaction risk company specializing in travel rule. We are the only pre-transaction decision-making platform, and we enable customers to identify and stop high-risk activity before it occurs on the blockchain. Next slide, please. Thank you. So you've already heard the various risks for banks and custodians, our partner ecosystem. I won't repeat all that, but I wanted to talk quickly about a few compliance challenges in banking when it comes to crypto. And banks that are supporting crypto, they must comply with specific regulatory requirements, which help them develop a robust risk-based compliance program that goes beyond compliance for traditional assets due to the cross-border nature of crypto transactions. So now we do need to understand that banks have relevant crypto regulations that are carried over from traditional financial industries, such as your AML, KYC sanctions, and of course, travel rule, which is, by the way, also known as the transmittal of funds regulation. Although banks will typically have mature AML, KYC, and sanctions compliance programs in place, they will need to enhance their technology and processes to meet the novel challenges of crypto assets. So, for example, transaction monitoring will require this combination of traditional off-chain transaction monitoring techniques, looking for your layering and structuring and so forth, and then on-chain monitoring from blockchain analytics providers kind of alongside with it. And from compliance with the travel rule, it would require a platform such as Notabene. Next slide, please. So travel rule gives you visibility on the transactions, but let me provide you with a little context here to understand better. So prior to 2019, virtual asset service providers, VASPs, were also asked to monitor their own customers. And so very few checks were performed when a VASP would send a transaction to a counterparty, and therefore they had very little to no visibility on who they were transacting with on the other side, right? However, this always increased that inherent counterparty risk when it comes to sanctions, illicit transactions, and high-risk activity. Now, leap to 2019, a year that was marked by increased cryptocurrency usage and arguably related risks, and this had triggered a significant shift in financial regulations. And to counter some of this potential crypto risk and scams and money laundering through virtual assets, the Financial Action Task Force, FATF, right, broadened its jurisdiction to include virtual assets and cryptocurrency exchanges and digital wallet providers and virtual asset transacting institutions, basically. And this transition led to a pivotal change for crypto companies, primarily due to FATF's Recommendation 16, which became known as the travel rule, which had clarified that VASPs need to manage counterparty risk, and they made it very clear that travel rule is not this mere obligation to transmit information. The information transmission part, it is rather instrumental, but it serves to boost the VASP compliance framework for reporting suspicious activity, take freezing actions, and prohibit transactions with sanctioned entities. So now we gain visibility on the other side of the transaction, and we can better assess the risk associated with the transaction counterparty. Next slide, please. So why is the travel rule so significant? Well, the travel rule provides this essential layer of oversight in this rapidly growing cryptocurrency market. It proactively can stop potential illicit transactions before it is settled on the blockchain by giving VAST this ability to reject and not accept the transaction from even coming onto their platform, and so reducing this overall AML and sanctions exposure. And this is why travel rule should be part of a healthy compliance stack for effective AML controls. And travel rule can enable banks to expand their crypto services through its built-in novelty of counterparty risk management, because it gives visibility as to who's on the other side of the transaction. Further, it increases mitigating controls and sanctions compliance by screening not only the originator, but name screening the beneficiary and the blockchain address on the transaction level, right? So in short, like the main goal of travel rule is to make transactions safer, more transparent, and more trustworthy for everybody in the crypto world. Next and last slide, please. Thank you. So super quickly, our Safe Transact product that kind of solves the various components for full travel rule compliance automatically, essentially, with advanced rules and reporting and flows. And basically all the way from qualifying the transaction and collecting the required information based on the various global regulatory thresholds that exist for travel rule automatically, to performing due diligence, to the secure and encrypted exchange of information, to insights and reporting. We are the global standard for travel rule transfer, with over 130 customers live worldwide across 24 originator jurisdictions and over 63 beneficiary jurisdictions. And we do have the largest coverage of VAST, including banks, institutional and retail customers, custodians, and on and off ramps. So with that, that's the end of my side. I'll hand it over to the Cryptio team. Thank you, guys.
Thanks, Lana. And I think this fits in well with Cryptio going last, because what Cryptio does is ultimately the end goal of all these companies, and it's to confidently and comfortably do their financial reporting and compliance reporting needs. We're back office SaaS product. We've been around for about 6+ years, have roughly 375 clients. Most of them are enterprise level, and anyone using digital assets could use our product. So we ultimately consolidate. Next slide, please. We ultimately consolidate all the digital asset data flowing through any company. We consider it a data lake. We are SOC 1, SOC 2, Type 2 certified. And it ultimately comes down to a lot of the data maintenance and controls that Cryptio is performing. It all starts with identifying, the problem that we're trying to solve, and that was data management, that was access to data, and it was how do you do complex calculations like inventory management, FIFO, LIFO, WAC. When you have so many transactions, at times millions of transactions happening within the organization. So we built Cryptio, and it's built on this in-house proprietary data infrastructure where we integrate and index the majority of the blockchains that we support. We support 40+ blockchains, and we also integrate with all the different liquidity and custodian providers through API access, and if possible, through some custodians, we'll use our indexing capabilities and go right to the blockchain to pull in that data. So once we pull in all this data, it's using that data and saying, how do we know that we have all of the data? This is the next problem. It's difficult enough to consolidate and get all the data, but next slide, please. It is building the different controls that Cryptio has within its SaaS product to give clients the comfort in reporting and doing the different quarter end or compliance needs that they have. So what we've built is a reconciliation for both on-chain and off-chain balances within the subledger to verify that the data is good. Because until you understand that you have complete and accurate data, your financial reporting and compliance reporting won't be accurate. And what we do here with blockchain data, we're actually going back to the blockchain, grabbing a balance off the blockchain and summing up all the different transactions within Cryptio and verifying that those transactions are accurate through a reconciliation process supported through our SOC 1, SOC 2 reporting. Also, off-chain balances. A lot of times it's difficult working with, I mean, there's so many different exchanges around the world. We help you identify if you have complete balances through the API connectivity with all these exchanges. So it gives you the ability to quickly identify any discrepancies in the data you have in your ledger to try to resolve these discrepancies and accurately report your financials. Next slide, please. So overall, we're just providing deep integration with all the different tech stacks, whether it be the exchanges, custodians, the different on-chain balances that companies have. But we're also working closely with the other companies that are closely integrated with Notabene. Like, for example, AlphaPoint working with Notabene, Fireblocks working with Notabene, and Coincover. It ultimately all comes down to flagging different transactions and identifying what should be included or excluded in your financial reporting. And that's where Cryptio comes in to identify the different transaction level details within your organization to help identify if it's an accurate balance that should be reported on. And ultimately, Cryptio is integrated with different ERP systems like Oracle, SAP, to help companies automate and streamline their financial reporting. But we don't do that until we go through a whole list of controls that Cryptio has built in-house to identify accurate balances so you could do your accurate financial reporting and compliance reporting needs. So overall, you could see, I mean, based on everyone's conversations here, how we all integrate and how we're all integrated into the crypto industry deeply, and how we're all needed 100% to effectively mitigate the risks. So I hope everyone got a lot from each one of us today. You could reach out to any one of us. Next slide, please. Before we get into that, we have some upcoming events to highlight. We have DAS London, where we have the Digital Asset Summit coming up March 18th. We're going to be hosting events with the companies you see here. We're going to have Skyline Drinks on March 18th. So you could sign up through a website, which we'll provide after this call. And we also have a great morning event where we have some high profile speakers from Bitwise, from Hashdex, and we're going to be talking about how the ETF companies are breaking into the industry and how they're thinking about things industry wide. So I'm not seeing any questions here. Chloe or Tunde, has anyone submitted questions prior to this that we'd like to cover?
No prior question submission, but we are opening up the Q&A. So whoever the participants, if you want to ask any questions to the speakers, it is open, and then you can leave it in the Q&A, and then we'll answer them.
And I'll also open this up to everyone here that helped contribute. If there's anything that you'd like to also wrap up on from your segments or just overall presentation.
There is one thing that we've seen that has been interesting in that the nature of digital currency is that it's global. And as different jurisdictions evolve their regulatory regimes around digital currency, I think one of the considerations that a lot of our clients have had is their interaction and use of specific types of tokens in specific regions. For example, in the US, a lot of tokens have been deemed as securities by the SEC. And so having those tokens as active trading pairs, for example, within an exchange in the US, domiciled and with US clients, exposes you to different regulatory requirements and oversight than, for example, if you were to just have Bitcoin and Ethereum as a trading pair. And we see this with a lot of the large players, right? The segregation of dollars and Bitcoin, even if you look in your Venmo, right? The usability of them as it relates from Bitcoin and Ethereum to other types of cryptocurrencies. So I want to point that out as a very precise consideration to take when you're dealing with it, or when you're designing your project, right, or your company, is which tokens, which types of tokens are considered in what ways in different jurisdictions, and what are some of the regulatory requirements you might be putting yourself, in the spotlight of as you offer these different types of tokens and the instruments that use them.
I think
we got another question here. How does interoperability work between the solutions?
So I'm happy to.
Yeah, go ahead.
So at a high level, what I would say is that interoperability now is mostly via APIs. So just give you like a very simple example. Customers that want to screen transactions with Notabene, for instance, within Fireblocks, will create an API key and plug that API key within a Fireblocks tech stack, and then define the type of monitoring that will occur based on that transaction screening. So it's mostly APIs, but also blockchain screening, right? I think Cryptio, you guys actually screen the blockchain itself and then connect the wallets that are being that are running the operations, typically powered by Fireblocks, with whatever information you can gather on chain. But I think someone else has something else to say, so I'll just stop there.
No, that's exactly it. So the idea is that there's several different flows that can take place. For example, one might be, restricting certain customers' assets, given that they're trying to make a transaction to a nefarious counterparty. In that case, like maybe Notabene flags that, AlphaPoint is able to act on that information and freeze that in the ledger. And then maybe those assets have to be then put in a restricted vault. Cryptio is independently checking it on chain, with not using the API data from Fireblocks or AlphaPoint, but with its independent check on the blockchain where that asset has moved from one address to another address, and then reconciling that with the data of the operational execution there. So there's this like constant, two-factor reconciliation going on across all the different systems to make sure that, hey, okay, have the instructions been sent to the appropriate softwares? And then has the on-chain activity that has taken place, does that match what the instructions said to execute? So that's the kind of interoperability there. But yeah, it's all driven by APIs. But everything that you're seeing here, all the solutions, actually the way this whole panel came about was that we all found ourselves with the same as vendors with the same leading banks and clients. And we were like, well, we've all independently done RFPs and won these processes. Might as well we all kind of come together and talk about how our products work together, because clearly our clients have figured it out before we have. So we decided to put this together as a stack that is proven in the space. And given that we're all, certified to very, very high levels of, security certifications, SOC certifications, that interoperability play is also covered in a lot of these APIs that we've all independently created. So yeah, this is yeah, this is just one small thing to add on the interoperability piece.
So
Cool. Any
if
questions from anyone else?
And yeah, please don't hesitate to reach out to any one of us independently or as a group with any additional questions. We're happy to field any of them.
Yeah, and I've been told that we hit an all-time high probably an hour or something ago on Bitcoin. So I'm sure there's a lot of happy campers around here. But yeah, there's those events in London. So if anyone is attending London DAS, they'll be in an email afterwards, those events. Feel free to reach out to us independently on LinkedIn, email, and yeah, happy to help. Thanks, everyone.
Thanks, everyone. Bye.
Ahman, Jeff, sorry, one more question in the Q&A.
Oh, sure.
Is
All right.
there software that bridges them together? That's the question.
So the beauty is you don't have to have a third-party software to bridge it together. The idea is that all of our systems have APIs that already integrate with each other. In most cases, it's just a matter of going in the respective software and just clicking connect and generating an API key and pushing it in the other software, and that's kind of it. Yeah. Anyone else to add anything there? That's from Cryptio side.
No, I agree. This is, I mean, the way the tech stacks have been built nowadays is to like maximize interoperability. So the APIs are open and public, and all you need is, in most cases, just a key, an API key to actually access the system. So you can basically design the level of integration that would meet your requirements without having to rely on a third party. So it's like very open and flexible from that perspective.
Oh, we've got another question. Can the onboarding be simplified given exposure to multiple providers? Yeah, I mean, I think there's something for us to work on here as well, but for sure the onboarding can be simplified. I think all of us have been around. We're all very mature companies in terms of how long we've been around and the clients we're already serving. We all have very strong playbooks of how to implement our softwares. There is often a natural order in terms of the implementation of these softwares. And yeah, we can definitely help you if you have like a particular case in mind. Given that, you know, putting together a digital asset product in a bank is no sort of small feat. It would be pretty custom, but yeah, it's something we can put together for you. Anyone else want to add something on that in terms of the onboarding?
I mean, from the Coincover side, say that as an element of the lost access piece is to be a slight arm's length to people. So actually, you know, be good it's a very good thing for us to be slightly separate, even though we work very closely together in partnership, because it's great to have that arm's length disaster recovery piece. So some things, particularly in this world, are slightly better with that slight separation rather than one big onboarding journey.
Yeah, I can speak as well from the AlphaPoint perspective. We integrate with multiple different KYC providers. It's generally done one provider per instance, right? It's generally you're going to have one KYC provider for your entire onboarding exchange. Obviously, there are industry leaders with KYC that integrate to multiple exchanges, but it's generally a one-to-one relationship.
Yeah, and I was just going to add on from from the Notabene side. I think also that, you know, for certain clients, we could surely streamline and all work together to make a smoother onboarding as smooth as possible, as we do all seamlessly work well together. I think the devil's in the detail when it comes to certain intricacies of a customization or perhaps use cases, right, of different of some of our different clients, I would say, right, from different angles. as we're servicing them. So I think we can come at it from a holistic point and try to simplify any points where we can. But I think realistically, there may be points of separation because we obviously specialize. We started early on saying, all right, we all specialize in certain things. And I don't think you can just kind of have one blanket over that, because then it won't be beneficial. But yeah.
And also maybe just to add on to that, I guess one of the reasons why the questions may have been asked is about time to market. I think what I would say here is that our solutions are sufficiently mature to actually help our customers for a relatively quick onboarding. And there are different models of deployments to actually enable a relatively quick time to market. So we're not talking months or years, we're talking days or weeks. And with this level of interoperability, even though you may have to go through a number of different onboarding with the different vendors, you don't have any constraints in terms of time to market or whatever you would have seen a few months or a few years from now ago, actually.
We've got some more technical questions, maybe for Fireblocks here.
Yeah, I see that. How are you exposed are the keys? So there are different models of implementations of Fireblocks. There is a model which is SaaS, where the customer will have the primary co-signer and the recovery kits, and then the two of the other keys will be hosted on the cloud. And there's another model where all three keys will be hosted by the customer. And so essentially, as part of the onboarding process with Fireblocks, there is this disaster recovery mechanism that is mandatory to move into production that essentially guarantees access to the assets, irrespective of Fireblocks or any other providers. And this is where actually Coincover comes in and supports our customers for the management of their disaster recovery kits. Now, in terms of the cryptographic algorithm itself, it's been tested at scale by the biggest players. And there is a level of decentralization because, again, it's not multi-sig where you put together different pieces. The key shares essentially share the outputs of cryptographic puzzles between each other, which is a requirement for the transaction to be broadcasted. So there is never a central private key put together, nor at the creation of the wallets, nor at the signatures time. So which is an important distinction to be made here between MPC and multi-sig.
And quantum computing, it's something I've brought up one time, and our CEO said that he's not concerned about it. I don't know enough about quantum computing to give much more than that, but curious if anyone has thoughts on that being a direct threat to what we're doing.
I mean, from I hear this question sometimes, and also our CTO has been asked this question, and the answer is if quantum computing can break, the encryption elements that we have right now, we're gonna have much bigger problems than sort of accounting softwares and things like that. We're talking about, something that would change the whole order of how everything is built in the world. So yeah, I think the nuclear codes need to be protected first when that becomes a problem.
That would be my answer there. Is quantum computing is nowhere near what we thought it was, but like AI, it's accelerating kind of quicker than we expect over the kind of midterm. It would, yes, the many other codes are very important for us to work on. So there's a lot of things we'd have to do in the meantime. It's a very macro question.
Right. Any other questions? I think we can call it here. Thank you everyone for attending. Thanks to all the speakers as well, all the panelists. Really great to be working with you and continuing to be the trusted stack of the industry. We've got a final thank you as well in the question section, so that's great. If you're looking to bring a digital asset product to market within a bank, institution, exchange, custodian capacity, reach out to us and we'd be happy to help. Thanks.
Thanks,
Bye-bye.
everyone.